Alright, let's do this again. Last video had no sound. Thank you, Igor, for letting me know. Anyway, so what I wanted to do was explain how to trade this. So this is a study. On the left hand side is the hourly, and on the right hand side is 5 minute. That's all. So I'm taking a look here in the square box. I'm taking a look from the top of the pivot to the bottom of the pivot. All right. As it goes down to support, I'm taking a look for strength, buying to come in to bring up the market, basically a turning point. So now we'll turn our attention to the 5 minute chart, because this chart with the boxes is an hourly. So remember, a swing on the hourly looks like a trend on a 5 minute. And that's what you get. This box is this whole thing. All right? So now we see the market is going down, 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 down until it gets oversold on 20,000 contracts. What do I mean by oversold? I mean it goes straight down without a correction. Relative to its trend, it goes straight down without a correction. That's what oversold is. It's not 20 and 80 or whatever, 30, 70, whatever that is. All oversold, overbought means that the market continues in a particular direction without a correction, meaning without a pullback. As you can see, there's the biggest wave in this trend, and clearly it's oversold. Just look at all the down waves. This is the biggest one. It's oversold, and it has the most volume. Over here you had 20,000 contracts. 20,000 contracts came in, and basically that means it's a climax. All right, so just mark it as a climax. Remember, this is all happening all on the way down to a support level. It's not in the middle of the range, or just like, it has to be against the level of interest. There's two of them. One is support resistance, and the other is the test of the breakout. That's it. All right, so it goes down, has a climax at support. It has a climax on a 5 minute at a support level on the hourly. Okay, so after the climax, there's a little test, and then there's a reversal. Here it's very critical to observe this. This is 10,000 contracts off the low. 10,000 contracts off the low. So they're buying. As it's got oversold, there's buying going on. All right, so that's what's going on, and it's very visible. You see 10, over here it's all blah, 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 blah. The only one place that I could have gotten confused, it did get confused, was right here when 8,000 came in. But again, that's not at a support level. It was just like tagging. It was tagging. I guess you could call it support level. Because it's a minor little breakout over there, right there. It was just testing. So this right here could have been preliminary buying or short covering or whatever. Okay, but here is where the juice of it came out, after it got oversold, and then the buyer stepped in and bought 10,000 contracts, which is the biggest volume on the trend. After that, market just basically came back to test, as it almost always does. It always tests, and then sometimes it retests. Just, I don't know why. This is just the way the markets are built. All right, so break right here on this bar, then rallies on 10,000 contracts and goes down. Now, you have to be able to read this. Do not use indicators by themselves. They will mess up your brain. So over here, you see 10,000 up, only 1,000 down, only 1,000 down, and finally 3,000 down on the test. And after that, it goes up on 2,000, pulls back only on 1,000, meaning that supply is gone. That's what that means. All right, and after that, it launches and goes up to basically this area, over here, where the volume kind of increases, telling you it's time to get out. Telling you it's time to get out because that volume is the biggest volume since this, and it's at a resistance level, like minor resistance. So it's time to get out. And that is a study of a turning point on the 5-minute against a support level on the hourly for the crude market. This was a very evident, like very obvious trade. So, and the risk was really nice. Like this much risk, you could easily get a 3 right into 3 times. Right here, ding, 1, 2, 3. Anyway, so that's one. Now, forget about that. Now it's time to move forward. What I'm looking at now, which is really interesting, is as the market pulls back to that same area, right, there's heavy volume coming in right here. So that's 11,000 contracts. I'm not sure if that's climactic or not, but it is the biggest. 1, 2, 3, 4, 5, 6, 7, 8, 9. I don't know. It's like biggest volume in the up and the downtrend on a pullback. So this is saying something. Like there should be some type of something to watch here. So I'm not sure if it's going to range and then rally or if it's something else. But this is very evident that if you're short and you see this type of action, it's time to think about getting out. And it seems like they did a spring and then going higher. So this might be a minor climax. Anyway, so I'll be looking at shit like this. So let's move on to the next market. So I just did crude oil. Again, the demand came in 10,000 contracts. I don't really see the supply very evident, but there was a minor climax that told you get out 6,000. And then finally here you have 11,000. So it's telling you like it's having difficulty going lower and all that, springs it, rallies on the biggest bar. This range is quite large. See that? And large volume, so it's just time to get out if you're short, like for the intraday. Anyway, so I'm done with just mark this. Yeah. So that's the rally, like, and that's the downtrend, the uptrend and downtrend on an intraday basis, right? Now I'm getting real curious. As you can see, the 11,000 led to this. So I'm getting a little curious, but anyway, I want to see what else is out there. So let's move on to another market. This is gold. Long story short, this is a really nasty market to day trade. It's always been that way. It's just stay away from it. That's all I got to say. All right, moving on to the next. Here we have the Treasuries. Again, this all sideways movement here. I don't like it, but this kind of volume up here has got me intrigued because it didn't break out. That's enough volume. It should have broken out. So Not sure what's going on, but it's just, is it random? Is it blah, blah, blah? I don't know. All I know is that there was enough volume here. As you can see here, the markings are there that led to the rally, and now that type of volume is coming in here, and it seems like this effort, because after that it went down. But this range type of thing is very difficult to trade. I know they say, oh, you know, just trade support and resistance, but it's far more complicated than that. It's not, you know, just drawing two lines. You have to have some level of skill. All right. So this type of chop is what the problem is. The reward sucks. All right. So let's move on to the next. This market again has got me intrigued because you had the breakout over here on the hourly, the soybeans, right there, and it's coming from a base. You see all these bars, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 11, 12 hours, and then it did this. I can't really detect too much up here. You know, when it does this, instead of rotations, it's difficult to trade. All I know is that it based and rallied. So you have 37 up, 10 down, again 26 up, only 8 down. Should rally more. So, and it might be, let me see this. Basically rallied to test, the volume dried up over here. So I think this is ready to go. Whenever this market opens, I don't even know, because these grains, they have a tendency to close earlier, and you have to really watch the time. So like that's the problem. All right, next market. Oh shit. So I was looking at this. This is the corn, and these grains are just going. I don't know what's going on, but it's just going. And I marked this area right here because I knew there's some type of, something's not right. Because you see it's like coming over like that, and then the selling came here, went up, broke, but I'm going to see if it turns back down. If it turns back down, it's a good short. But the problem is this is I rather not counter trend this. There's too much strength here. See this? So it's very likely if it goes to a support level, it'll just get bought. And this could be the breakout for another leg higher. As you see, it's increase in range, increase in volume, but you can actually see it very clearly in range. So let's just move on to the next. Because if you counter this, and you're going against the market. So this was a really nice situation. On the left-hand side, you see that there was a breakdown and there's a test of the breakdown. It's that simple. You had a break on the hourly and you had a test of the break. On the test of the break, look at the volume that came in. See that? Look at the volume that came in, and it went ding, 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 and break. So it's a short, in my opinion, because you could see that on the test of the breakdown, the selling pressure on wheat came in and ding, 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 and look at this bar on heavy volume, unable to go higher, minor upthrust of this range, and it's going to go down. So that was the panic right here, the climax. That was a change of behavior right there. Wyckoff, for some reason, when he talked about the change of behavior, I think he called it automatic rally, but I don't know why. But on the selling side, he called it like change of behavior. Anyway, that's a different story. But here's your, and then, initiated it, and this was the heavy volume that ended the trend. And this was the selling pressure that came in that also, I believe, it's changed the trend. Where's the breaks? The break is right there. So you're testing the breakdown, which means it's another opportunity for reversal right here for short. Moving on. Euro is getting really, really interesting. Finally, because it's a lot of chop, but now it seems like it's gotten out of that chop phase and it's ready to trend. So you can very clearly see what happened here. You had a rally, all these pullback, finally some dullness over here, right here. No volume, no nothing. So you had some dullness, right? You had more, and then you compare the pullbacks to the rally. So less, and finally 13 up and only 6 down. This is, in my opinion, this is the springboard. Right here, you can call this springboard or this a springboard. The reason being, because of all of this, if this was a point and figure, it would have X's and O's, all that. So it's ready to mark up, and it does. And now we are in a minor uptrend. So I'll be looking for the turning point on this, not when I'm sleeping though. All right, moving on to the next. This again, euro going, yen going. What does that mean? That means they're screwing the dollar. That's what it means. All right, so that was your change of behavior, which I was looking at. And this initiated your trend. Prior to that, you had a nice climax. Then you had your change. Then you have pullbacks at 8, 28, 12, and the confirmation higher high rally, which came back to test and initiated the trend. What's nice about this, though, is that it's coming off of a support level, off the hourly. That's what you're looking for. Looking for it to hit a level and then go. So it goes all the way back here. And now you see the volume coming in. They're picking up. So I think this yen I think it has much more to go. Look at all this cause. Look at all this cause. And now it's rallying. So take a look at pullbacks. Forget the counter trend or like the change of behavior, all that. You want to see pullbacks. Pullbacks. Next is Bitcoin. This market, again, I've been goes back to test, right? Goes right into the bar, and it picked up on 11 volume, pulled back on 16 volume, but as it pulled back, volume came in, pulled back, ding, ding, ding. Right here was the spring, and at first I didn't know if this was a spring or not, but once it increased in activity here and here, I knew it was going to go. So anyway, so we just want to mark the trends and understand that you have to know its volume. You have to know that this thing has 19, basically 190 contracts. And here you had 410. Basically, it got oversold or whatever it is, climactic over here. Test, secondary test, and finally demand picked up. It does that with, against this level right here. So now I'm looking for, and there's a breakout on the, at least on the hourly, probably on the daily as well, somewhere. Over here, the volume has expanded a bit. You see, went up on 19 and then 32, ding, 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 37. That's not really a good thing. Like all that volume all the way at the top and then it pulls back. But again, this is a very strong market. So just need to be careful with this. And the up waves are now again greater than the down waves. Over here, 33 over down on 13. If this is 17 and this is like 5 or whatever, then it's getting ready to go again because demand is greater than supply. So let's move on to the next one. Coffee, the pressure, again, first you have to see, the levels. So over here, they created that base. It went down and right into this area. And when it did that, it created a climax 155, and then when it went lower, it was finding it difficult. You see that 53, 56, and over here 49. But what gave it away was this 5 and 9 and 19. This is very low, and you can see over here there's no volume. All right, now whatever the reason is, this based and set up the breakout, which again made like a range, and then finally went up. And now you have some selling pressure over here after this pressure breakout over here. But until I see a clean break, I'm not going to overshoot a judgment or make a judgment yet about a turn, because this seems pretty strong. And like on a point figure, this would be a lot of X's and O's, which means it has a high price target. And I don't want to make some premature judgment without a clean break. There was some pressure here, and it basically made a new high after it. So now taking a look at coffee. This was the breakdown. It's in the breakdown, so it might turn here. Wait for the turn, because this bar is quite large. There's a lot of speed here. Hit a support level, up, down, up, right into this area. You can have like a turn over here, but just wait for it. This has a nice story. Over here, you had a rally, and then it just came back, just that same type of action where it's just within a tight, nasty range. But as it did that, volume came in here and picked up here. You had some climax, a change, sideways, and this was the bar that really was very evident that it's going to go higher. Right there. The key distinguishing feature of this bar was not just the volume, and not really the volume, but the range. That range spoke volumes, no pun intended. But that range is what gave it away. And now you have the market trying to go higher, maybe trying to break out. It seems that way. So this looks real nice, like it's ready to trend and go up. Very nice. Anyway, so this market I'm watching right now because I think it's ready to bounce. All right, but this is more of a counter trend, so just have to hold on. All right, because volume came in right there. First of all, just see how it puked. All right, so you had a climax up here. You had your change. You had ding, 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 ding. Made the lower low, then just went into a trend. Down on 3, up on 1, down on 8, up on 3, ding, ding, all the way down. And here you have volume coming in right there. So it went straight down and then it was bought. So I think that there's buying over here. All right. But I just have to be careful because the hourly is going down. So if there is a bounce, it might just bounce to, some level or something. So just have to wait it out. Here we have copper. I have no idea what's going on in here, but it was interesting on the daily. And it seems like it's attempting to rally. What caused some of this down move was that, where it went up on 17, down on 27, then up on only 7, 18, 16, and just went down. Now we have some volume coming in, but it's not exceptional. So I'm just sticking back. All right, folks, so this is just an example of, the basics of supply and demand. It's really not overly complicated. We make it complicated. These are just numbers. These are just numbers. And you're looking at what, price and volume, meaning the distance and volume, or distance, duration, and volume, whatever. So it's not rocket science. When the demand is stronger than the supply, the market will go up, and vice versa. The other thing is, typically as price goes up, there's another law. I don't want to get into too much of this, but you've heard the basics, which is, if demand is greater than supply, price goes up. Supply is greater than demand, price goes down. How do you see that? You see it based on 3 things: price, time, and volume. How else can you see it? How do you see that? I mean, you just see it on the waves, right? And be able to judge that behavior. The other thing is, there's another law, and it has to do with demand. As price goes higher, the natural result is for demand to decrease, because people don't like to buy higher prices. But that's, there are times when more volume comes in at higher prices because there's FOMO involved, or the idea is that prices are going even higher. But in general, as price goes up, demand should decrease. And as price goes down, supply should decrease. Why? Because you want to buy low and you want to sell high. Anyway, and that's very important to be able to detect that normal type of behavior versus abnormal behavior, which is, price as it goes up, there's more volume coming in. That tells you why climaxes are diversions in a way. More on that later, but bye. Gotta go.